네, 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 지금 시장을 크게 좌지우지하고 있는 건 심리라고 정리를 해볼 수 있을 것 같은데요. 여기에 영향을 미치는 요소들 오늘은 준비를 해주셨다고 합니다. 지금 바로 만나보시죠.
So if we think about what we have right now, let's look at how the conditions are right now to extend a rally and compare that to where they were. So what we'll do is we'll look at sentiment and we'll look at option put call ratios and we'll try and understand the differences now versus what we've had just 2.5 weeks ago. So we've talked about the bullish sentiment, okay? And we have seen over the course of, this is the last 12, 13 years, where this bullish sentiment goes. So we can see that when it's down at the bottom down here, the markets tend to do better, okay? We are down at the bottom. One thing that's interesting to me is that we're not down as low as we were. Obviously, we've rallied up, but it hasn't bounced that much. So there are still a lot of people that are saying, oh, I'm still not bullish. I know this market just went up on me. I probably was too short at the bottom. I had to cover. I had to buy some stuff back. I had to put my portfolio back kind of where it's not overly pessimistic, but yet I'm not a believer. Up here, we're believers, okay? But down here, where we're 50% or greater bullish, down here we're 24%. Well, if we can get back down to 15, 16 again, we're going to be back at one of those conditions where the market can try and do better from. Now let's think about bearish people. So when we have basically a high amount of bearish up here, okay, what we have found is that the markets tend to do better. Okay, we got up pretty darn high when we look across the board up here. So that was great. But now we've sold off. Okay, we've sold off fairly significantly. Very much less people are bearish. They're not bullish, they're just not bearish anymore. And now we're starting to slip up and get a few more people bearish. But we want to get back above, honestly, 45% or even higher. If we can identify that there's a lack of liquidity going on at the same time and that we have a bearish put call setup where people are long too many puts relative to calls. Now let's look at the difference between the two of these charts. And what we can find is that whenever this spread gets really low, okay, in other words, few bulls relative to the bears, we tend to do better. We still have not bounced fairly significantly off that bottom. We did, and we came back. And as the market continues to roll down a little bit more, we're going to go back down and test these levels again. Well, if we get down to those levels again, we have the condition all set up to be able to anticipate some kind of a constructive bounce if we still have the put-call ratio set up and we see a lack of liquidity. So let's look at the options and see what we see. When we look at options, we can think about options. You can buy put options or call options, options to sell stock or options to buy stock on indexes like the S&P 500, the Dow Jones, the NASDAQ, or you can buy them on individual stocks. Okay, so let's look at the indices, the put option, put call ratio on the indices themselves. And what we can see is when we have really high amount of put call ratio setups, those are conditions where the market's probably going to hold in. So we did not peak really high off of these levels, but we had a fairly significant bounce off of these levels. We are now down on that put call ratio for equities, down as low as we've been since July of last year. So to be able to find an effective bottom, we need to get this back up to 160, 170, that sort of thing, or higher, and not basically 1-to-1. Because what we are right now is 1-to-1. And that's not going to cut it if we want to think that the market's going to go higher right now. We need more people to get short because we definitely have a negative bias to the market. Let's look at now the equity put-call ratio of the individual stocks themselves. And we can see the same kind of thing going on, okay? So what we had at the end of November, mid-November, when we were at the top of the market, we had a very, very low put-call ratio in the stocks. Well, that turned out to be the top of the market, and as the market sold off, we saw much more put activity than call activity. And then at the end of January, at the end of February, and at mid-March, that put-call ratio was clearly favoring put buyers versus call buyers. Well, now we're back down again below 50%. So we need to get, which is like 1-to-1 in that other chart, we need to get this back up here if we want to support ourselves with a relatively low-risk buy opportunity to sell, to buy opportunity to purchase stocks. So, and finally, what we want to think about is, okay, we've had a significant sell-off this year. In fact, we've had a very significant sell-off relative to the first, say, 50 days of the year. So if we take a look at from 1928 to 2022, okay, we were down almost 12% in the S&P 500. Okay, this is the fourth worst start we've had, and two of those years are 1935 and 1933, which are years that we were in basically the Great Depression. So what we saw in 2009 was the end of the whole Bear Stearns, Lehman Brothers bankruptcies, the mortgage collapse, okay? And then in 2020, we had COVID, and this is where we are right now. Well, my point is that look at day 49 to the end of the year. And this is one of the reasons why I think in the back of my mind, I still anticipate a mid-cycle election year rally in the second half of this year. Once we've identified that the Fed's probably done more than they need to, or as much as they need to, and we've seen inflation start to stabilize and actually work its way lower, not lower being negative, but lower meaning we're going back down to 4 to 5% inflation as opposed to 7 to 8% inflation. We could anticipate having a significant move off of day 49, okay, which is about mid-March, early March, March 8th, and be able to see where we go by the end of the year. So I think what we have to see is conditions that we can identify where we either find the good buy opportunities and then look for new highs minus new lows, advanced decline lines, actual stocks actually physically doing better over an extended period of time, where we can start to get into what I still think is a secular bull market, even though we're in a cyclical bear market. So a secular bull market means that I think between now and 2030, and why I've talked about it before, the population demographics, all the technology improvements that we're doing, all the networking in the cloud and everything. So what we're making is the economy is becoming much more efficient in terms of like how it can grow when we do all of this networking and all of the other things that we're doing. Technology is still going to increase. Electric vehicles, all the other things that we're going to do are still going to propel us up, together with the population demographics, which is the percentage of people that are actually working and earning and spending at the same time, say the 25 to 45-year-old group, which is still a growing group that's going to grow all the way to the end of the 2020s.